Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is August 11, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. Your stock market is in the uptrend, but the indices pulled back a little bit. Leading stocks remain strong. My plan, I have reduced some of the long positions in the ETF, but I continue to hold on to the strong stocks. Let's take a look at the chart of the indices. A German DAX index, this is in the uptrend, remain above 50-day moving average, but right now it's kind of a horizontal, just give a breath. And Shanghai Stock Exchange Index is in the downtrend, and it tried to consolidate at the bottom. We will watch whether it can go above 50-day moving average or not. Right now, it's still below 50-day moving average. An index or stock cannot go up if it's remain below 50-day moving average. Nasdaq Composite is in index. This is in the uptrend. This is a U.S. high-tech index. Very strong uptrend. Last week, pulled back a little bit. Mid-cap index is also very strong uptrend. Russell, this is small cap index uptrend. SP 500 big cap index uptrend. Gold monthly chart. Gold is remain in a downtrend. However, take a look at the gold index daily chart. Gold looks like it's about to fight for the 50-day moving average. If gold can stand above 50-day moving average, this downtrend may reverse. Gold may go back to the uptrend. We have to watch, see what gold is going to do next. Right now, we don't know yet. Silver is in a downtrend. However, silver closed above 50-day moving average on Friday. This is above 50-day moving average for a long time. So this worth of watching. Looks like a silver finds support around $18. It does not want to go down below $18. So is gold and silver found its bottom? We don't know, but it's a possibility. We need to continue watch. US dollar is in a downtrend. Crude oil index. Crude has broke above $100 per barrel. That is a resistance, long-term resistance. It broke above that resistance. Now it's in a uptrend, but it's consolidating on the top. GDX is gold mining stock ETF. GDX had been in a very severe downtrend, but recently, last couple weeks, it broke above 50-day moving average and dropped down again and then rebound back. We have to see this time, can it stand above 50-day or not? If it can stay above 50-day moving average, which is a yellow line, and that can pull the gold and silver up. So gold mining stocks usually lead the metal either down or upside. U.S. Real Estate Index, IYR. IYR had been in a downtrend in the past three months, and now it's still in a downtrend. It just rebounded a little bit, but it's about to form that death cross, means 50-day moving average cross below 200-day moving average. That is a technical indication that's a death cross that will put this to a long-term downtrend. Long-term or mid-term downtrend. MPB is a mortgage bond fund, and this thing goes reverse direction of the mortgage interest rate. So MPB has been going down, has been broken down since May. Mortgage rate has been going up. So right now MPB is consolidating at the bottom. We have to see what it's gonna do next. OIH oil index going, it's an uptrend. Energy in SMH is a semiconductor. It's also in an uptrend, but the recent peak did not go above the previous peak. That is not a good sign. We have to see whether this thing can hold 50-day moving average or it will break down. If it breaks down, that can bring down the market as well. SMH is one of the leading index of the market. XLE, it's a energy index uptrend. XLF, U.S. financial sector ETF. Financial sector is leading the market as well. And the market usually don't go up if financial break down. So financial can tell, financial sector, by watching financial sector, you can tell what the market is likely going to do next. XLF recently had a pullback, and this peak did not go above the previous peak. That is a bad sign. So we will watch whether XLF can hold 50-day moving average or not. If we break down 50-day moving average, that would be a very bearish sign for the market. We just need to watch it. XOP, that's a oil and gas exploration index uptrend. Let's take a look at leading stocks. What qualify as a leading stock? Those are the strong stocks that has a in the hot sectors, and they're the leaders in their sector. They have very strong earning growth, such as double-digit earning growth annual, like a 20% earning growth every year in the last 3 years, or at least 15 to 20% earning growth compared with the same quarter last year. And usually those stocks are the first one to break out from a base when the market started the uptrend. And the chart pattern usually indicates the institutional accumulation. That means on the up days, volume is really high. On the down days, volume is low. And every market bull cycle, there are many of those leading stocks, and they may be different from one bull phase to another bull phase. For example, in the bull phase of 2009, Apple was a leading stock, but the recent bull phase is not. Apple has been lagging. We have a different stocks are leading the market now, and I'm going to show you. And then currently, there are some stocks that are leading the market. But the first list I'm going to show you is a leading stock that's too extended. The strongest stock tend to break out first when the market tend to the upside. And a stock become extended if its price is more than 5% past the breakout pivotal point. If you haven't bought them now, it is too late to buy. You have to wait for the pullback. Sometimes a stock offers second buy opportunity by pulling back near 50-day moving average and then rebound from the 50-day moving average. That is a sign institution is supporting the stock, so you can buy when they rebound from the 50-day. And if you have bought those stocks, and you should hold on for them. It's not a sell right now. Those stocks such as LinkedIn, Facebook, Tesla, New Skin, etc. Let's take a look and the current leading stocks that too extended. Celgene is one of it. Gap up here with a high volume. That's a buy signal, but right now it's too extended. Facebook, this gap up is a buyable gap. It's broke out from the base, gap up with a huge volume. That's an institution buy this stock. So the gap up is because of the strong earning. So that's buyable. But right now it's too extended. Michael Kors gap up is right here. So right now too extended. Light in the box, and this is a new stock. It's a Chinese online retail stock. It broke out here, and right now it's too extended. LinkedIn is a very strong stock. This is a market leader, and this is a breakout buy point. Right now too extended, and after earning it gap up again. New Skin and breakout is right here. But right now it's too extended, obviously. OII, Ocean Engineering, this is an oil stock, Ocean Oil. Anyhow, they broke out right here, too extended. Starbucks has a several breakout point, and right now has been in the uptrend for a long time. Looks like the pullback to 50-day moving average, that would be a buy opportunity. TripAdvisor gap up here from the flat base, that's a buy point. Right now too extended. Tesla's breakout was right here, and it actually pulled back to 50-day moving average after breakout. So that's a second buy opportunity as it rebound from the 50-day. Right now, too extended. Cannot buy those stocks. Yandex is also broke out here, too extended now. And second list I'm going to show you, those are the stocks has a strong fundamental, but they're still near the buy point. They're still within 5% of breakout pivotal point. Let's take a look at those stocks. ACT breakout 133.1, and right now still within the buy range. Netflix breakout it's about $249. That's a breakout. Right now, still within the buy range. OAS had a breakout right here, but they pulled back near 50-day moving average and got supported at 50-day moving average rebound. And now it's just being very choppy, but looks like this stock is supported at 50-day moving average. Look at this candlestick. Every time it touches 50-day moving average, their money pulling and lift it up. So that's a sign of institution support. Overstock breakout here from the flat base. Right now, pull back to 50-day moving average. Proto Labs, this is a 3D printing stock, and it's supported at 50-day moving average again. So that's a buy signal. What to do in this market? First of all, the principle is only buy stock if it's within 5% of breakout pivotal point. With exception, if the stock gap up from a base, you may buy at the open of the gap up day and use 3 to 5% below that bottom of the gap as your stop loss price. So if you buy a gap up, the risk is actually pretty small. Your risk is 3 to 5%. If you bought at a breakout, a regular breakout, you can use 7 to 8% loss as a stop order price. And if you can consider take profit and the 20% profit, except when the stock runs up 20% in 3 weeks from the breakout, not from the gap up. If it from the breakout, it runs up 20% in 3 weeks, you can hold on for 8 weeks if the stock has no troublesome chart pattern. So that means this stock has a potential to give you a lot more than 20% profit. So hold on to it. That's all for this week, and see you next week.